Imagine waking up to find that the backbone of the global banking system is no longer old-school money transfers and dusty ledgers, but a cryptocurrency that most people still barely understand. It's happening, right now, and almost no one outside the industry is talking about it. Banks, those titans of tradition, are quietly laying the groundwork for an entirely new digital financial ecosystem. And at the center is XRP, a crypto asset best known for fast cross-border payments. But that's just the tip of the iceberg. What's coming could completely upend how we send money, store assets, and even imagine what a bank can do. Why are the world's largest financial institutions suddenly betting so heavily on XRP? Why is this technology more than another crypto hype cycle, but rather the foundation for something far bigger? And most importantly, how could this secret shift affect your money, your investments, and the future of finance itself? Let's unravel how a series of technical breakthroughs, legal battles, and silent boardroom decisions have set XRP on a collision course with the core of global banking. By the end of this story, you'll look at banks, digital currencies, and your own financial future in a totally new light. First, let's set the stage. XRP, created by Ripple Labs, was originally designed to solve a pressing pain point: international payments. Traditional cross-border wire transfers are expensive, slow, and routed through layers of intermediaries. Ripple's goal was to make moving money as easy as sending an email. This idea won over many early adopters. By 2020, Ripple's technology was being used by dozens of banks and payment providers worldwide, allowing them to settle cross-border payments in seconds rather than days. The XRP ledger, a decentralized blockchain network, became the foundation for these transactions. But most people thought that was where XRP's story ended, a fast, niche money mover, while the rest of the world focused on Bitcoin and Ethereum. Yet behind the scenes, something much more ambitious was brewing. Over the past 2 years, several game-changing shifts have transformed XRP from a payments tool into the bedrock of a much larger plan. First, regulatory developments. For years, Ripple and XRP were tangled in a legal standoff with the U.S. Securities and Exchange Commission. The uncertainty scared off many institutions. But in 2024, a series of partial legal victories, including a pivotal judgment by Judge Torres, began turning the tide. Ripple agreed to pay $50 million to resolve claims about institutional sales, bringing long-awaited clarity. A complete victory for Ripple in its lawsuit could provide a regulatory framework for financial institutions to integrate blockchain technology, notes the market research site SMQKE, and that's exactly what started happening. Second, the infrastructure. In May 2025, the Chicago Mercantile Exchange launched XRP Futures, a watershed moment, giving banks and institutional investors a regulated way to enter the market. Almost simultaneously, the first XRP Futures ETF, XRPI, was introduced by Volatility Shares, unlocking new investment routes for massive pools of capital. Banks began accumulating large amounts of XRP, 640 million tokens in one documented transaction. And Ripple launched its Ripple Custody platform, offering secure digital asset storage tailored specifically for these institutions. Meanwhile, Ripple's technology was being quietly integrated for much more than payments. Banks started exploring how the XRP ledger could let them build decentralized lending services, manage digital custody for tokenized assets, and even experiment with central bank digital currencies, CBDCs. As Monica Long, the president of Ripple, put it, institutional adoption of XRP is progressing despite regulatory uncertainties, driven by futures markets and evolving SEC priorities. But what exactly does all this mean for the global banking system, and for you? Traditionally, banks make their money from custody, lending, foreign exchange, and moving funds. These are legacy businesses, often slow and riddled with inefficiencies. Ripple's suite of tools promises to overhaul every piece of that puzzle. The XRP ledger is being pitched as the operating system for a future where assets, stocks, bonds, currencies, even real estate, are represented digitally, transferred instantly, and settled automatically. Banks could charge custody fees on digital assets held for clients, deploy new decentralized lending and borrowing services, and slash operational costs by using XRP for global liquidity. A crypto analyst named Brett observed, as tokenization gains traction, banks will require massive liquidity in XRP, potentially pushing it into the limelight. Imagine a world where banks are no longer relying on aging databases, but are running entire digital ecosystems, trading, storing, and lending assets at the speed of software. Yet the move to a new digital backbone isn't just about efficiency, it's about survival. Fintech startups, decentralized finance, DeFi, and even central banks are racing to disrupt the way value moves. If banks don't adapt, they risk being left behind. The XRP ledger offers a way for traditional institutions to leverage blockchain tech without ceding control to new upstarts. One industry source, All Things XRP, summed it up. Banks are now exploring Ripple's technology to build and manage digital services at scale. Last year, Ripple received regulatory approval from the Dubai Financial Services Authority, DFSA, to expand digital asset services in the Middle East. Soon after, Ripple payments went live in Brazil through Mercado Bitcoin, signaling a rapid push into emerging markets. Awards started stacking up. Ripple was crowned a leader in crypto fiat payments at the Power of Payments Awards, even as the wider crypto world struggled under regulatory scrutiny. Meanwhile, behind closed doors, institutions started running private pilots with the XRP ledger to experiment with digital custody and innovative contract functions. Could banks one day offer decentralized lending, borrowing, and even complex automated investment products, all powered by the same technology that made international payments instant? Let's step back and consider the implications for global finance. If XRP, once dismissed as just another altcoin, becomes the rails for asset custody, tokenization, and global liquidity, the DNA of banking itself could change. Not just for banks, but for central banks designing digital currencies, asset managers, and, by extension, ordinary investors and savers. But every revolution faces obstacles. The regulatory environment, especially in the US, remains fraught. While Ripple has cleared some hurdles, the SEC is still reviewing 8 XRP ETFs, and there's talk of classifying XRP as a commodity, not a security, similar to Ethereum. This legal ambiguity creates headaches for compliance departments worldwide. As Egrag, a respected market analyst, points out, XRP's price is highly sensitive to technical and regulatory developments. He notes that XRP's price movement is heavily influenced by the relationship between the 21-week EMA and the 33-week SMA. If institutional adoption ramps up, the floodgates could open, yet uncertainty keeps many on the sidelines. And then there's competition. Ethereum, Bitcoin, and a slew of upstart blockchains are all vying to become the settlement layer for the future. Each has strengths, but few can match XRP's blend of speed, cost, and regulatory headway. Now, with the review of 8 XRP ETFs underway, decisions expected by mid-June 2025, the outcome could dictate just how rapidly institutional capital pours in. Some experts, like Monica Long at Ripple, expect a tidal wave of adoption if the US signals clarity. And as banks build out their digital custody and liquidity solutions, a new question emerges. Will XRP truly become the digital backbone of banking, or will the movement stall under pressure from regulators, competitors, or unforeseen risks? The pieces are in place: regulatory breakthroughs, major infrastructure, and quiet but aggressive moves by the biggest names in finance. The outcome, institutional revolution or another lost crypto promise, hangs in the balance. But before we look ahead, we need to ask, what are the risks? And what would it mean for the everyday person if banks, regulators, and Silicon Valley's brightest minds all rush to stake their future on XRP? As the dust settles and the next phase of adoption begins, the world waits, and so should you. So, what could the near future actually look like if banks succeed in making XRP the digital backbone of finance? Let's envision a few powerful scenarios, and importantly, what these mean for each of us. First, imagine a world where banks no longer just compete to offer faster payments. Instead, they compete to build entire digital ecosystems, where everything from your mortgage to your stock portfolio, your savings, and even your identity exists on a blockchain. In this landscape, XRP isn't just a bridge currency. It could be the settlement layer for tokenized assets, the highway for central bank digital currencies, and the vault for institutional digital custody. But why would banks go all in on XRP rather than building their own private solutions or relying on more established coins? The answer lies in a mix of technical advantages and shifting incentives. XRP's network can handle thousands of transactions per second, finalizes payments in seconds, and offers programmable features via the XRP ledger. More importantly, the recent approval of XRP-focused futures and ETFs, like the launch of XRPI on major exchanges, means institutions can now bet on, hedge, and accumulate XRP in regulated, familiar ways. This isn't just crypto speculation. It's the entry ramp for pension funds, asset managers, and yes, international banks. But there's an even bigger transformation quietly underway. Behind closed doors, banks from New York to Singapore are conducting pilot projects that use Ripple's technology for asset tokenization. Imagine a future where real estate deeds, stocks, bonds, even artwork exist as digital tokens. Settlement could take place instantly, with XRP moving value 24/7, no matter the currency or the country. Custody, compliance checks, and audits, automated through smart contracts on the XRP ledger. Of course, every revolution faces resistance. The path to XRP-powered finance is riddled with uncertainties. Regulatory clarity remains patchy, especially in the United States. Judge Torres's recent denial of a settlement motion between the SEC and Ripple reminded everyone that old battles are far from over. The SEC's crypto task force continues to scrutinize whether XRP should be treated as a commodity or something else entirely. Yet there's movement. Ripple just secured a key regulatory win in Dubai, opening new markets and proving that international progress can happen even as U.S. regulators drag their feet. The risk of regulatory whiplash is real. If the SEC or other jurisdictions crack down, either by restricting bank use of XRP or slapping new compliance costs on users, momentum could stall. Innovation could be stifled, and the grand vision of a borderless, tokenized banking system might fragment into silos. But don't forget the flip side. Some of the world's smartest money managers are gearing up for the opposite scenario. If the SEC greenlights the 8 pending XRP ETFs, as many analysts expect could happen in mid-2025, it would unleash a tidal wave of institutional capital. Remember Bitcoin's ETF effect? We witnessed an explosion of investment and legitimacy. If XRP gets similar treatment, its role in finance could leap from the shadows into the spotlight virtually overnight. And let's not underestimate network effects. Ripple's recent partnership with Mercado Bitcoin in Brazil signals that emerging markets, where financial infrastructure is less entrenched, could leapfrog straight into blockchain-powered ecosystems. This isn't just about Wall Street. It's about making financial services accessible, affordable, and programmable everywhere. The acceleration in Latin America may well inspire similar moves in Africa, Southeast Asia, and beyond. Yet, competition is fierce. Ethereum, Solana, and even traditional giants like Swift are racing to roll out their own tokenization, custody, and settlement services. Ethereum's established DeFi ecosystem and Solana's speed are formidable. But XRP's unique positioning within regulated financial channels gives it a fighting chance. Monica Long, Ripple's president, put it directly. We expect increasing adoption of XRP, especially as institutional sentiment shifts and markets mature. This arms race could play out in unpredictable ways. If banks and institutions embrace open blockchain infrastructure, XRP may serve as a public utility, neutral, liquid, and programmable. If, instead, they retreat to walled gardens, true interoperability could take much longer, and the opportunity for a new, inclusive financial era could slip away. What does all this mean for individual investors and for everyday users like you and me? Let's break down the practical lessons and opportunities, so you're not just watching the revolution, but can actually benefit from it. First, awareness is power. If you're involved in crypto markets or considering exposure, understanding why institutions are quietly accumulating XRP is crucial. The arrival of regulated investment vehicles like CME-traded futures and ETF products has already signaled Wall Street's seriousness. When big players build infrastructure, they typically do so for a reason, and ahead of retail FOMO. Second, keep a close eye on regulatory developments, particularly in the US and Europe. If XRP is granted commodity status, or if major ETF approvals materialize, the risk-reward calculus could shift dramatically. This is not a guarantee of success, but it's a signal that institutional doors are opening wider. For investors, this could mean the window to accumulate at today's prices may not last forever. Third, think beyond price speculation. As XRP's infrastructure matures, the real upside could be in its use as a utility, for cross-border payments, tokenized asset trades, and even as a collateral layer for DeFi. If you work in banking, fintech, or global business, understanding how XRP-enabled rails might replace or supplement legacy systems is more than just an investment thesis. It's a competitive advantage for your career or company. Fourth, anticipate the trickle-down. The shift to blockchain-based custody and lending is not just for the big guys. As banks compete to win your trust, we could see more user-friendly digital wallets, better rates on blockchain savings products, and direct access to tokenized investments for ordinary clients. The very structure of finance could become flatter, faster, and more transparent. For developers and entrepreneurs, the opportunities are even broader. With Ripple opening up its ledger to more programmable contracts and DeFi applications, there's a fertile ground for building tools that plug directly into institutional-grade finance. Early movers who understand both the technical and regulatory nuances stand to capture new market segments, especially in regions where the old system never worked very well to begin with. But remember, with great opportunity comes real risk. Volatility is a feature of emerging technologies, not a bug. Prices may swing dramatically in response to regulatory headlines, ETF approvals, or even rumors about central bank adoption. Make sure your exposure matches your appetite for risk, and always use secure custody solutions for any significant crypto holdings. All of this brings us back to our original question. Can XRP truly overcome regulatory uncertainties, fierce competition, and market doubts to become the revolution at the heart of global banking? Or will these efforts unravel, disappointing both institutions and everyday investors? The answer, as we stand on the cusp of a new financial era, is neither simple nor guaranteed. On one hand, the foundation is stronger than ever. The combination of institutional infrastructure, regulatory progress abroad, and the looming ETF catalyst could propel XRP into mainstream adoption. Experts like Cryptomus forecast that 2026 could be a breakout year, fueled by institutional use and a maturing crypto market. Even conservative analysts admit, if global banks ramp up XRP-powered liquidity for tokenization, the resulting demand shock could be dramatic. On the other hand, the threats are real. Regulatory backlash, delays, or unexpected competition could slow everything down. Banks are strategic and conservative. They want certainty before risking their reputations and client assets. But here's a secret fact that hasn't been widely discussed. While the headlines focus on U.S. courtrooms and ETF approvals, the real battleground is quietly shifting to emerging markets and to the software code itself. The smartest banks are already building cross-border rails using XRP under the radar, laying the pipes before the mainstream even notices. By the time the average customer is offered a blockchain-powered mortgage or a tokenized savings account, the foundation could already be set. This means that the XRP ecosystem's success may not hinge solely on U.S. regulatory drama, but on the silent momentum of global adoption and technical innovation. So, what should you do? Stay informed. Follow regulatory news, watch for new partnerships and pilot projects, and keep an eye on countries where crypto regulation is clear and progressive. Diversify your knowledge, and if you invest, diversify your portfolio. Opportunities abound for those who are prepared. We're witnessing a turning point in the history of money. Whether XRP becomes the backbone of this brave new system, or just one of many competing rails, depends not just on technology or regulation, but on how swiftly banks, businesses, and everyday users embrace the change. Which side of history will you be on? Will you wait until the revolution arrives at your doorstep? Or will you be one of the early adopters who helped shape it? If you enjoyed this deep dive, hit like and subscribe for more. In the comments, let us know your thoughts. Do you believe XRP will become the digital backbone of banking, or are you betting on another contender? And if you want to know more about how banks are already testing